Well, let's talk about commodities, and this week really has been positive for this space as well. Take a look at the gold and silver prices. You have seen a strong run-up coming in for these commodities. Same is the case with energy as well. That one really is preying on its individual fundamentals, the rupee depreciation, and of course the bit of a decline coming in for the dollar index has been taking the prices higher as well. The base metal prices, of course, has been a very choppy sector, while the international markets have seen a constant decline for a third straight day. It's MCX prices which have continued to see a run-up coming in because on back of the rupee depreciation for this sector as well. Let's get in then. Chirag Sheth, he's VP Latin Manharlal Commodities, and he joins us live on the show with his views on all of those commodities. Chirag, hi, welcome. Let's talk about gold first and the kind of run-up that we have seen in last 2 days, today as well. How would you want to trade the current levels?
I think what really has happened in gold is twofold. Firstly, we have seen a rally coming into MCX largely on the back of rupee depreciation, and then rupee has really fallen off the cliff. And on the second hand, we've got some sort of geopolitical premium getting built into gold prices on the back of the conflict which is there in the Middle East. If you look at international market, we've seen over the last yesterday and even today, there is some sort of weakness which is coming in. I think the bulls are losing the strength, and also the fact that RBI has now opened up a window for the OMCs to buy dollar. I think this would also lead to some sort of profit booking into dollar at this moment. So we believe that this would be a good opportunity to go ahead and short for investors who would like to bring risk on the table to go ahead and short both gold and silver. Keeping that in view, we would be shorting silver at around 55,600 kind of those levels, and look for around 600 to 700 drop from here on. With regards to gold, we also hold our bearish view on gold, and we expect gold prices to fall by another 150 rupees.
Chirag, this is for the intraday market, of course, but for the slightly longer term, for the next week or 10 days, perhaps, would you say that the long term, or rather the upswing in the crude prices, especially precious metals, perhaps is done?
I think, the upside is limited. We've already seen huge outperformance coming in for MCX, and that really is not justified from a fundamental point of view. You look at the demand from India is really down. We are now getting into a very important fortnight or so where, there is Fed meeting which is there. You've got GDP numbers which are likely to come out. You've got non-farm payroll numbers which are likely to come out. So that is going to determine now what is going to happen for most probably precious metals over the last 1 month or so. I think I'll wait for, this week to clear out before pinpointing whether, the precious metals rally is overdone or we could see some sort of change in trend.
Chirag, how would you take a look at the crude prices? Because while the geopolitical concerns are still there, and there have been various statements from US, UK, France also saying that they are preparing for a military action against Syria. But today, right now as we speak, in the European markets, there has been a nearly percentage point of a decline for the international markets. The Indian markets, by virtue of rupee, seems to be holding up though.
Yeah, I think, Manisha, what really happened is that the whole fear psychosis and the geopolitical premium, according to me, got a little bit over ahead, And we've seen this thing happening in, crude oil market for now umpteen number of years, where whenever there is some sort of crisis which is there in the Middle East, market tends to overshoot, and this is something that is happening even at this moment. One thing that people need to understand is that Syria is not a really big oil producer or oil exporting country. It is largely because that this could then spill over towards some of the key regions like Iran and Iraq. That's why we are seeing this kind of, premium getting built into the prices. But I think what really need to be seen is that it's not going to be so easy for US to go ahead and, attack Syria. So it will take time. And I think that would be kind of an opportunity where one could look at shorting crude oil. So we will be looking at shorting at around 70 and look for around 70 to 80 rupees on the downside. And one more event which could support is that we are now nearing the end of summer driving season. So that could somewhere limit the so-called demand coming from the US.
Chirag, while you have a sell on crude, would you take a contrarian call on the natural gas prices? Because that is one space that has continued to do well despite whatever crude has been doing.
So I believe that natural gas is nearing its, kind of the rally could near an end. We could see some sort of movement on the upside coming in natural gas. We could easily see 3 to 4 rupees more upside on the natural gas, but I would no longer be a buyer into natural gas at this moment.
Sure, and natural gas prices are trading at 245, nearly 3% of a run-up coming in for that space on MCX. Chirag, also, how would you look at the base metal prices? Because while the international markets really haven't done, we have been trading flat within that zone of 0.5% in last 3 days now. It really is the Indian markets, especially copper prices, running up all the way to 500 plus kind of levels.
Yeah, to be very honest, I was very surprised by the kind of move that we saw in copper prices. We saw copper prices moving above 500 levels, and to me, really, if I were to even look at rupee depreciation, fundamentals somewhere do not justify these kind of levels. Even on LME, a $7,200 is kind of unjustifiable. I would be more comfortable for copper at around 6,900 or 7,000 levels on LME, or somewhere around 485, 488 levels on MCX at this moment. We believe that rupee could kind of strengthen over the next couple of days' time, and this could lead to some sort of pressure coming into base metals as well. So I would be sellers into copper at around 495 or 494 kind of levels, and I won't be surprised if copper prices falls to as low as 485 in the next couple of days' time.
Chirag, how would you look at the nickel, excuse me, how would you look at the nickel prices as well? Because there has been a huge run-up into that one too in last 3 or 4 sessions, especially in the Indian markets, 955 holding on to that even now.
Yeah, I think, even if, yes, nickel has moved up in the Indian market. If you look at nickel in the LME, it's trading at around 14,500 kind of those levels. I think nickel, if it tends to move above those levels, then what we could see is significantly nickel pig iron producers actually coming into the market. And that could lead to some sort of, kind of pressure on nickel prices. Also, the fact that one thing that you have to look at is that there have been data which has been coming out, and a lot of statements coming from some of the steel producers who said that, that production could actually go down over the next 1 month or so. That is likely to put some sort of pressure onto the nickel prices. I believe that nickel prices, if one sees at around 965, 970 levels on MCX, is kind of a fantastic opportunity for somebody who wants to hold this position for around 1 month or so. Keep a $6 of 1,000, and we could see easily levels at around 900 kind of levels over the next fortnight or so.